don't put a large chunk of your net worth in your account, because here anything can happen. And trust me, my net worth is 2 crores. I'm going to put 1.5 crore in market. You'll never be able to make money with that's one more thing, by the way, because you'll I just joined, so I don't
Nothing,
have
bro.
context.
How are you?
All
Will be
good, yeah.
back to home.
Just going on. As of now,
Great, great.
Friday, I don't have any work, so my weekend starts on Friday. You'll be
Okay,
working for BSC for another few months.
great, great.
Yes, I read your post yesterday about not being able to stay away from the markets. When you mentioned that you keep glancing at the market, is it on a continuous basis or you see it off and on when you are on a holiday? Just curious.
So it's more like this. I think what happens is when something is, it's like having a hyper habit, and that's why I use the term addiction, because you just can't like resist the urge of not continuously staring at the market, but okay, what has happened? How are the spreads looking? Because it was an expiry, and I told my family I'm not going to be trading when I'm on vacation, and it was like an intent to kind of also see that okay, because I need to do that. See, now as it's been a while now, I have a daughter, and I want to always ensure that I spend enough time and should have the ability to detach kabhi kabhi, because finally it's just work, right? At the end of the day, you can be very,
Absolutely.
yeah, you can be very passionate about your work, but ऐसा नहीं है कि बस जिंदगी में यही है, right? Like that can't, and I'm thinking on those lines not because I'm feeling any effects of it now, but बस ये सोच लो कि
Down the line, down the line.
yeah, it's going to
See,
be
I have discovered a solution to this. I will be very frank with you. इस बात का हमने solution ढूंढ के निकाला है. In my family, we have three full-time traders: myself, my wife, and my daughter. And my son is also just about ready to join.
one
What we
second,
do
it's
is
not
for the
showing me
past
who's speaking, and
Altaf, Altaf.
oh, okay, okay, yeah, please, yeah.
Yeah. So what we have done for the past 4 months is we've decided to start, traveling a bit. So what we do is we take two laptops and one screen with us, 21 inch, and we travel around 10 days in a month nowadays. And what before we go to any place, we ensure that there is either Wi-Fi connectivity or we can use mobile internet, and then we trade till 12:30 as a family. And after that, we do not even look at the screens, not even on the mobile, and we are just out.
Okay,
So that is one
okay,
thing I have started doing with my family because all three of us are into trading. Myself, my wife, and my daughter.
okay. Maybe that works for you, but that is,
I think,
um,
Shreyas, we are getting some kind of
yeah,
background noise, bro.
yeah. I was getting a call.
Oh,
That sounds nice, bro. Like if it works for you, but like that will not work for me. So my trading doesn't work like that, and I cannot actually travel and trade also. Yeah, I'm having some connectivity issue. So this thing, but yeah, my trading is.
yeah, getting calls.
Am I audible?
Yeah, you are
Yes,
audible.
yes, you're audible.
Yes,
Yeah, yeah.
yes.
So what I was saying is maybe that works for you, but that would not work for me. Maybe it's the styles of trading that we do.
Yes,
So
yes, because
it's
my
either
trading is wound up by 12:30.
correct, yeah. So that wouldn't work for me. But no, I mean overall the thought over there was that should make more of an active effort. But the nature of our business is that once you're super habituated, then it's really hard for you to get your. If you do this every single day of your life, then it's just hard to resist. So, but yeah, that was that. But
And not
otherwise,
only
I think it's
during market hours,
necessary.
not only during market hours, I remember a phase, say maybe 10 years back, when even I used to be addicted to looking at even the US markets and how SGX used to close at 1 o'clock at night, even though it used to make no difference. But yeah, as you said, that was an addiction at that time. So yes, detachment is very, very essential.
Yeah, because it's work at the end of the day, and see, once again, it comes down to approaches. As somebody who trades primarily intraday, it'll be very different from somebody who's looking at what is happening across time frames, because you're trading very small time frames. So nice. But anyway, I kind of crashed this entire discussion. I have no idea. I just like just came here to check what's up, and
We just started just a casual conversation, but
okay.
in between we went into the deep subject.
So sorry.
So how you will save your capital from the flash crash, or is there any circuit in intraday? Such kind of things we were discussing.
Oh, okay, okay, okay. Yeah.
Yeah.
See, I'll be very, so that's what I wrote about yesterday. Also, I kind of figured out this entire thing, at least on paper. Okay,
Okay.
the fact is, let's all accept one thing. Okay, hedged trading or otherwise, even if you're hedged and all that, one thing that you have to accept very firmly is that nobody gives a damn about you. And as long as your money is with somebody else, anything can happen. Now, this could be from broker going bust to some event at the exchange, or like broker having a problem placing an order in your account that you did not even mean to place, showing you one order and having a different order in their back end. Tomorrow at the end of the day, you're really not going to get any surety of resolution regardless of whose mistake it is. Um, so the way you have to look at it is, if your net worth is 10 crores, right? Don't put more than 1.5 crore in your trading account. It sounds very demotivating to a lot of people, saying that, then how can I grow so much and all? But beyond a certain scale, okay, maybe if you are earlier and you don't mind that risk appetite, because you know that, okay, if I lose, let's say you're somebody who's in their 30s and they're like, if I lose 20-30 lakhs, then I have my age in front of me. I'll still be able to, I want to take a little more risk in life and try to make more money. That's fine. But once you scale up to a certain capital, you have to understand, especially if you're trading shorter time frames. Okay, I'm talking about if you're trading, not if you're trading across multiple larger time frames. If you're trading shorter time frames, please accept fully that a big chunk of your net worth that you've put there in your trading account will always be at risk. And tomorrow, if something goes wrong, you will say that I have hedge, I have this thing, whatever. Because when technical difficulties happen, anything can happen. Let me give you an example. Let's say you have a perfectly hedged trade where your max loss value at risk is 30%, iron condor something. Now, what happens is there is some panic event in the market. What does the broker do? Broker gets instant margin calls for many of his clients. What does a broker do when he started getting margin calls across? He starts squaring off client orders. Do you think he's going to square off your order spread by spread? He will square off whatever he can square off whenever he finds liquidity at whatever price. So you might have had it. So let's really zoom out once. Many people like, look, I have a hedged trade and 30% is my max loss. Do you think a broker will allow you to sit 30%? Because by then your margin requirement would have shot up like anything. Okay, he will instantly start squaring off. In that process, he squares off your hedge leg. What do you know how much damage can happen? You expected my value at risk is 30%. I can't do more than that. Don't be under that feeling. So the only solution to this, if you don't want to be scared, right? Don't put a large chunk of your net worth in your trading account, especially if you're someone who trades shorter time frames. Once you have scaled up a little bit, once you, like, for example, if you have a very small capital, it does not matter that much, because let us say some average working person, let's say they blow up 10 lakhs. Okay, what is 10 lakhs in today's age? If you work for a year, you learn 10 lakhs. Okay, like after all your expenses, and in most mid-level jobs, you should be able to save about, if nothing else, at least 6 to 8 lakhs, and in 2 years you will be fine. Whereas once you scale up to a very large extent, then you have to start thinking that, boss, first of all, is my trading approach scalable? If you're trading smaller time frames, it's just not scalable. Please accept that. Like, if you're trading longer time frames with low leverage, using leaps, or you're trading in cash and all, then it's fine. Okay, you're not leveraged. But the second you step into F&O and you step into shorter time frames, please accept anything can happen. Don't be under this. So the only solution to it is, as you make money, and many people will not like me saying this, as you make money, take money out. There's profits made in the market don't become profit until you actually put it into other asset classes. Some people will say, boss, why I will get less return in other asset classes? Not everything in life is about return. It's also about creating different baskets, creating safeguards. Now, for example, I'll give you, many people say, oh, this is so financially stupid. Let me give you an example. Every month I pay myself PF. Okay, as employer and employee, I pay myself PF, I pay my wife PF, I pay my parents PF, everything. And roughly about 1 lakh per month I'm putting in everyone's account. People say, boss, you're getting such little return in PF, and plus there's a lock-in period. I know that, but it is one basket. You've now created a separate basket of money you cannot even touch. I know that that is one safety basket. Now you pulled out money. Let's say you buy a small apartment somewhere that you give out on rent. You'll say, "Arey, rental yield not even 4% plus maintenance cost, kuch nahi milne wala." I understand that it's not always about financial optimization for maximum return. It's also about, once you have got like a fair chunk, don't be an idiot and risk it all in something where you don't have control. Because please understand, nobody has control. Krish, someone will say, I have 1:1 hedge, I have 1:1.5 hedge, I will actually do whatever. You don't know. When a broker system is so overloaded, it's margin calling and it's squaring off every client. By the way, do you know, most people don't understand how margin call works. Forget like a 10% crash or something. If market falls by 3% and you're at a mark to market loss of 5-10%, and the broker is getting multiple triggers of this, he's going to square off all your orders, man.
Yep.
You going, yeah. So where are you? This, I have fixed VAR. You have fixed VAR, great. But now the broker has started squaring off your account. Your VAR has gone to shit. Right. So keep all of these things in mind. And this is not some games, not some time pass. The number of people who come here and think that, okay, it is all some game or whatever. Because finally, I'll tell you what, okay, you take this from me, you'll see a lot of inspirational people on Twitter. Oh, this guy has made so much money, or YouTube, and some genuine people also I'm talking about. I'm not talking about the guys who are faking it. Forget about them fully. Genuine people also. Boss, I know a lot of traders, right? I don't know a single big trader on Twitter who today, if they stop trading, put all their money in bank FD, just from the interest, they're not their generation, multiple generations can live and survive because they have that much money sitting in the background. No one can see that. Okay, let me be very honest. When I started trading as well, like 2016-ish, when I started doing full time, boss, the reason I could do, and this is also the reason why I'm very against, like, even when people like, oh, teach me, whatever, I'm like, I'm never going to do that because you don't know my background, right? I was I was from a situation where I was like, okay, I have a good degree, I have a good job, my family is also well to do, everyone is earning. Okay, so we have like basics covered. Even if I take a risk of like 1 or 2 years of my life, and at that point also, I was like, let us say I lose also 15-20 lakhs, it is not a big deal. I can say that. Whereas somebody who has worked, it has a different background, is the sole earner in the family, let us say, their entire savings is there of some 20-30 lakhs. Can he say that with his money? No, he can't. Please understand, there's a lot of nuance to all this. It is not about just like, whatever. Can money be made trading? Absolutely. But is it something that everyone should pursue? I don't think so. I really don't think so. And people think that, okay, just because, somebody has capital, that's why they can make more return. That's the only truth to it. That only big capital makes big money. And for you to have big capital, you need to have even more money in the background where you know that, okay, if something bad happens tomorrow, still I have so many backups in place, right? I have this, maybe in your family there are other people then earning, maybe you have a lot of assets, maybe you have other passive income sources that you've set up, stuff you've given on rent. Think about all this, right? Like, if somebody's net worth is 10 crores and they put 1 crore in their trading account, if they blow up 30% also, he'll be like, okay, whatever, 3% of my net worth. Whereas when somebody is like, oh, okay, my net worth is 2 crores, I'm going to put 1.5 crore in market, you'll never be able to make money. That's one more thing, by the way, because you'll always be shitting yourself. And even if you make money, right, just the emotional tax that your body is going through, I don't think it's worth it. So anyway, I went off on a rant, but basically that's my summary of how do you protect yourself completely. First thing you do to protect yourself completely is don't put a large chunk of your net worth in your account, because here anything can happen. And trust me, if they, okay, this sounds a little conspiracy theory like, but just
No, no, no,
just
no.
think about the
That's actually a
sentiment,
truth.
okay?
That's
No, no.
actually a
Think
truth.
about the sentiment in something as stupid as sports games. Okay, sports game betting, where if you compare that to stock market, there's not that much money. Yes, I know there's crazy money in cricket betting and in football betting, but if you compare it to stock market, that much money is not there. How much extent people go to cheat and do match fixing and do like small signals so that the punter and the bookie know, okay, what is going to happen next. Now you think, if people can't take your money in a fair way in the market, they won't take it in an unfair way. These freak trades, now SEBI said do some investigation, but how many hundreds of times has it happened before on NSE also? So you have to look at it this way. You're a weak participant. You're a nobody. You don't have money. You don't have anything. Okay. Just come here with what you can afford to mess up with. Don't put too much of your net worth here saying that okay, I'm going to maximize my returns, I'm going to pledge it, which means I'll get minimum this much return, then on that much I'll earn another this much return, so it'll become like this in a year, then I'll compound my money, then like this it'll grow. Boss, I will tell you, it's been now a little more than 3 years. All I've done is taken out money because I'm too scared. I'll be very honest with you. I'm too scared because I'm only comfortable trading shorter time frames, which means my trading is not scalable. My options are either scale it up into something where you're trading larger time frames or take money out. So that's more or less what I feel on safeguarding yourself. The main thing you should do to safeguard yourself, don't put too many eggs in this F&O basket, especially. If you're unleveraged, it doesn't matter. Okay, at least you're not going to, have a situation where the broker is able to do random things with your account. But he can do that in F&O. Okay, so yeah.
Great,
We
great
need you to
insights,
come.
Shreyas.
We need you to come more frequently on spaces and put this across to other people. People think that the stock market is a place where you just come and multiply money. You've put it across very, very beautifully. Thank you.
My pleasure, bro. I having, I don't know if my voice was fine because I'm not able to
Yeah, it was
hear you
perfect.
properly.
You were
It's fine.
perfectly audible.
No, it's
Because
clear,
of the
sir.
multiple
Yeah, I
voices.
have like another 10 minutes. After that, I have to head out. So,
I just want to ask you one
Shreyas, I
last
have
question
a
from my end.
yeah, bro.
When are you
question.
coming to Hyderabad again? It's been almost a
Uh,
year.
yes, probably sometime next year, Chris. Probably
Okay.
sometime next year. Yeah, yeah,
Okay. Fine. Fine. Fine.
yes.
Yeah, Shreyas, I had a question. So,
Yeah, bro.
if someone's around 20, 22, somewhere around that lines, that age, what would you recommend? I try to keep about 10 to 20% of my income in hard cash, and the rest of it just goes to again into my trading account. And then, so would you recommend keeping more? Would you recommend what would you recommend? And most of it, so most of my trading account, 80% of it stays into equity pledged, and the rest 20% stays cash.
See, bro, so it comes back to the exact same thing that we just spoke about. First of all, in finance, everyone likes to have standard models, right? So everyone likes to say this much should be equity, this much should be debt, this much should be cash. And I think it's on some level, it is a little because somewhere you have to generalize. But the fact is, what personally works for you. For example, maybe your mom and dad have huge FD savings. Maybe they have, right? So in that case, you know that as an emergency fund or whatever, you have all these other aspects to tap into. You're 22, so I'm guessing you stay with your parents, and so then you know that okay, because as a family we already have enough in like cash form in this thing for emergencies or in some other aspect. Maybe you have a house, maybe you have two. I don't know, right? Right. So you're like, okay, I have all this. So of my remaining portion, I can put this much. You will have to figure out where you're comfortable. It's not about like and that's what I say, right? Risk appetite is dependent on many other things that are sitting in the background. So there's no real answer to that. As somebody who's young, yeah, you should totally have equity exposure beyond like, see, I'll tell you what, people misunderstand debt. I'll be very frank with you. I don't invest in debt for the debt return. The debt return is very nice. Yes, I'm very happy with that. But the main purpose of debt that I see is that over time, generally speaking, risk assets, depending on how you value them, will either be fair price, slightly overpriced, or like underpriced, right? So you have to arrive at how that risk assets being equity, real estate, commodities, gold, and anything like that. So my main purpose of having debt is so that when I get an opportunity to purchase a risk asset, I have money for it, and that I don't have to sell one asset in order to put it into another asset. And when I say asset, I mean risk asset, right? So, like when you look at these things, so that's how I look at it, and that's why that's kind of where I try to maintain a balance between always having investments in bonds, and and sort of use those to channel into risk assets when I can. But you'll have to figure it out for yourself, bro. There's no standard one size fits all. Like there are some people, they'll say take your age minus from 105, whatever you get, that much should be equity, blah blah blah. So I mean, they come up with these models because you have to come up with some kind of model, but really, as they say, right, personal finance is personal, right? You have to like see what works in your overall setting. So
Yeah.
like
And
for example, my wife and my mom, okay, my wife and my mom, they've refused to invest in equity, because especially my mom, right? So for the longest time, she's just like someone who doesn't want to invest in equity. So when I think of it, I think of, so we're a joint family, right? So I think of it from the perspective, okay, my mom has all this in terms of like cash or FD holdings. So I can increase my personal risk appetite when it comes to, let us say, something else like equity, right? So yeah,
yeah,
there's no one size fits all. Yeah.
and just one additional answer. So I know for a fact that you don't deal into any gray area stuff when it comes down to markets, but then they, like everybody's doing it. Do you believe that that's a way that people who have lower capital should go? When I say gray area,
See,
I
I'll
mean,
tell you what. Okay, I'll tell you what. Everything comes with a risk. All right. If you're breaking the law, see, there are people who are breaking the law, and still the general community will think that they are not being unethical. If you know what I mean. But at the same time, you still are breaking the law. But I'll tell you something. Even if you're breaking the law, until somebody goes and complains about this particular situation and all that, nothing is going to happen to you. So one of the biggest risks you'll be taking, and here you're talking about other people managing money. So I've just disclaimer: I've never touched a single rupee of anyone's money. I don't manage money. So, but there are people who do it, right? And it's like a win-win relationship between the guy who's managing, getting, let's say, 15, 20, 25% cut, and all of this is like strictly illegal. There's no doubt about it. Okay, and the other guy is like, okay, I'm getting some alpha over whatever, because the guy who is having his money managed, he would have pledged some mutual funds, or he would have pledged some bonds, and he'd be getting. But I'll tell you what will happen and where you can get screwed. I'll tell you where each person can get screwed. The guy who's managing money, how can he get screwed? Tomorrow, let's say you lose a large chunk of somebody's money, and then they threaten you, or they go and start to take action against you by bringing out all the activities that you're doing. That's a huge threat for you. As long as you're making money for them, you will never have a problem. But if you lose money for somebody else, and I don't want to bring up names, but some time back, I think a year back or something, on Twitter, there was some lady, some other guy was managing her money, and to be very honest, it's both people's fault. She went and said, I want to take more risk, I want to make more money, but the moment he lost her money, she went crying everywhere, saying that he lost my money, he lost my money. And he was in a pickle because now he's going to, be called out on whatever illegal stuff he's doing. And she's in this situation where she's like, okay, now he's going to pay me back, because what it becomes very dirty. See, that's why I'm completely against this whole thing. Now, how does the person whose money is being managed be able to lose? How many people don't find illiquid contracts to transfer money from one account to the other? They might have managed your money perfectly for a year, 2 years, or whatever. Suddenly, some situation will arise, and that guy has access to all this cash that's sitting in your account, and has access to the means to transfer it to his own. Right? They go pick up some stock option which is not even being traded, not a single contract. Go place some random orders. Why can't you? You will be able to do that. So it overall, I am just against it, and I am against the whole premise of it. I know some people who do. I know a lot of people who do it. In fact, I probably know every single person who does it, at least on FinTwit and what they're managing. But the fact is, it's something I would personally stay away from. But if you don't have risk capital, then yeah, people tend to take that route.
okay, thank you so much for that.
Yeah. But always remember, as long as things are going well, no one will have a problem. As somebody who's managing money
Yeah.
for somebody else, that guy won't have any problem. The moment you lose money, that's when people will show you stars.
Yeah, I now have a, what do you say, like I now know what it means. So earlier I used to discount it, but I now have an idea of what it actually means. So yeah, I
Yeah.
get. I
Yeah. Bro, I'll do one last question, bro, and then I have to go and this thing. Yeah. Thanks for having me.
Fine, fine. Fine, fine, fine. We'll take one last question if anybody have. Raise your hand.
Hello, hello.
Yeah, who's
Hi,
this?
hi, hi. What's up?
Yeah, hi Himansh. Hi Bandi sir.
Himanshu, Himanshu.
Hi.
What's up, bro? How's it going?
I am fine. I am fine. What about you? Uh,
All well.
uh, I have one question from you. You used to do heavy quantity intraday straddle and strangle, and I watched your video also. And yeah, right now VIX is very low, right? 10 or 11. So are you
Hmm.
if VIX will come in future, means in after 3 to 4 months, it will come up again 18, 19 or above 15. So you will do the same thing, or you will wait? Means you will do do the same thing, or you will play safe like you are playing right now?
See, I'll give you an example of how I look at the overall picture. Okay. Now, in my opinion, generally speaking, every volatility regime changes by quite a bit, at least once in 3 months. Like if you were to compare premium behavior and like wall regimes, every 3 months you will see a considerable difference between 3 months back and like so on and so forth. Now, in terms of low wall regime, right? Like in this low wall regime, basically selling options alone, in my opinion, just it is very difficult to make money, and it gives you way too much variance. So in order to deal with that, what I do is I okay, think of it as previously I used to sell strangles and straddles. Now I sell strangles and straddles, but I also buy options between my strangles. Now, this could be I can buy only call option, I can buy only put option, I can buy both call option, put option, right? But my idea is I am reducing the impact of gamma on a lot of my strikes because the market is forcing you to trade close. If you don't trade close, then you will have no compensation, right? So, what is the point of even trading non directionally? So, what I'm trying to do is roughly if I am picking up an X amount of credit, in a day I'm spending between like 30 to 40% of whatever credit I've collected in just buying options. And my idea is with buying options is not to make a big amount of profit on the bought options, except like what I try to do towards the end, it's more of like a long gamma, purely long option trade. But generally, as the day progresses, the idea is I'm reducing my variance, I'm reducing the impact that is happening on my mark to market because I'm not somebody who wants to see -2%, +2%, right? I don't trade like that anymore because it's just I don't like the intensity of that anymore, right? It also is a function of capital, right? So that's kind of how I'm approaching it. Now, if walls go back up, there are two aspects to this. One is it's not so much about wicks, it's more about like weekly option IVs. If those go back up, then maybe there are situations where I will prefer to be on like larger credit values because it will feel worth it to me. Now, when IVs are at their historical lows, this week they've picked up a little bit, but last week was the lowest IVs, 0 DTE IVs on Nifty and Bank Nifty, both. Fin Nifty is not that old, so it doesn't make that much sense to compare historically. But even there, Fin Nifty also historically lowest ever option IVs. Now, at that point, I don't want to be heavily short volatility, heavily short gamma because I know that it's just not that favorable. Whereas, as I said, right, as the regime changes, sometimes what ends up happening is there will be a very low IV environment and there'll also be a very low realized volatility environment where it makes sense to do that. Whereas this is not the case. We're seeing consistently that the realized volatility is definitely there. A market is giving cracks on both sides. You will have one side option, 10 rupee option will go to 50, then it'll go back to 10 and go back to 50. Other side, what had become 5 rupees, that will go to 50. So obviously, with changing environments, you have to change, and this is where, like being a discretionary trader, you're always assessing what is the current regime. So what makes sense in this current regime? Should I be pushing to try and trade more on the credit side, or should I like add some debit to neutralize all this gamma effect? All of that is exactly what we do, no, as discretionary traders, because otherwise you might as well set up algos and trade strictly based on those signals. So this is kind of where sometimes it's little it really comes down to what does your experience of a previous regime which is similar to this tell you, and what is working for you right now, what is not working for you right now.
Got it. Got
So
it. Got it. Thank you so
yeah.
much.
All right. My pleasure, guys. I just dropped in because I didn't have much going on. In fact, I wanted to check if anyone's trading like Sensex and stuff, but
Yeah, I'm
uh,
trading Sensex.
Nobody has guts to trade Sensex non-directional.
I'm selling, I'm selling put options. That's basically what I'm doing on Sensex.
Hemant,
okay.
first
Uh,
first
And the
couple of months
liquidity is
it was
pretty
good.
good. I
Right
was
now it was not good.
32K in, 32K out with no issues.
Yeah. No, sometime back I was trading like Sensex with like very small size. Okay, like very small, like not even 5% margin type. But then after that glitch happened with their adapter, whatever, my the thing is that I'm not going to touch it until it like 6 months solidly proves itself. Because there's no dearth of expiries now, so there's no reason to run behind everything. So anyway,
Yeah,
yeah,
I get
yeah.
My
it.
last question is Bandi sir from you. Uh, Chat GTP ask you how to correct English, or you ask Chat GPT?
Very funny, bro. Very funny.
Don't take a course on
Chal.
trading and all, but you should definitely take a course on English. And Himani,
Yeah, seriously,
Exactly,
I will
Shreyas.
be the
I just
first student.
no. It's list already full up.
Perfect. Perfect. Thank you so much, guys. Pleasure talking.
Thank
I
you,
just
thank you,
dropped in
thank
to say hi. Take care. Have a good one. Peace.
you.
Bye.
Yeah.
bye
Thank you
bye.
so much, sir.
Bye.